Welcome back to the Daily Crypto Roundup. It's Monday, October 27th, 2025, and the markets have come roaring back to life. After 2 chaotic weeks of liquidations, fear, and sideways chop, the crypto world is starting this week with conviction. Bitcoin is holding strong above $115,000. Traders are already eyeing $120,000 as the next major target, and for the first time in a while, optimism is back in the air. Today's headlines say it all. Bitcoin blasts through resistance on global trade optimism. Binance Coin surprises the market with a $1.69 billion token burn, overtaking XRP in market cap. Almost every major altcoin is in the green. 90 of the top 100 coins have climbed in the past 24 hours. And Wall Street's tokenization push is accelerating, with BlackRock and Franklin Templeton quietly moving trillions of traditional assets on-chain. 4 stories, 1 theme, the return of belief. Before we get into it, if you're finding value in these updates, do me a quick favor right now. Tap follow, leave that 5-star rating, and help new listeners discover the show. Every single rating helps push this movement forward and keeps the show independent from corporate control. Thank you for being part of this growing community. All right, let's start the day where we always do, with the top 10 coins and the heartbeat of the market. Bitcoin is holding firm around $115,000, up about 3% in the last 24 hours. The market has clearly shaken off last week's nerves, and traders are eyeing that 120 level next. Ethereum follows at roughly $4,200, climbing over 6% today as staking inflows and Layer 2 activity remains strong. Gas costs have eased, and developers are building again at full pace. Solana trades near $200, continuing to lead the altcoin recovery with heavy on-chain volume and renewed developer momentum. Binance Coin sits just under $1,150, slightly higher after the latest token burn removed more than $1.5 billion worth of BNB from circulation. XRP holds steady at around $2.70, down slightly from last week's peak, but still showing strength after months of positive regulatory signals. Cardano is at roughly 68 cents, modest, but trending upward again as new staking pools and governance upgrades begin rolling out. Dogecoin sits at 20 cents, up around 2% on the day, still the classic gauge for retail sentiment whenever the market turns bullish. And finally, Chainlink at $19. Together, these assets make up more than 70% of total crypto market capitalization, which today stands right around $3.9 trillion, a massive comeback from the mid-month lows. Bitcoin dominance holds near 57%, a sign that institutional capital continues to favor the big names first, before rotating into alts. What a difference a week makes. Just 10 days ago, Bitcoin was trading closer to $104,000 after a record liquidation event wiped $19 billion from the derivatives market. Exchanges were overloaded, social media was flooded with panic, and doomers declared the bull market dead. And yet, here we are. Bitcoin has reclaimed $115,000, doing so with conviction and real volume behind the move. The catalyst is a blend of macro tailwinds and on-chain fundamentals. On the macro side, news of US-China trade talks breaking positively has sparked a broader risk-on sentiment across global markets. Investors expect easing tariff pressure and even a possible rate cut from the Federal Reserve by December. That sent equities higher, and Bitcoin rode the wave. Beneath the surface, though, the story runs deeper. On-chain data shows long-term holders are tightening supply. Addresses holding over 100 Bitcoin have now reached their highest level since early 2021. Institutional wallets that bought aggressively during the crash are back in profit, and they're not selling. Analysts at Standard Chartered told the block this week that if Bitcoin holds this range through Friday, we may never see it below 100,000 again. That's bold, but the market reaction shows traders are starting to believe it. Leverage has reset. Funding rates are back to neutral. The overheated froth is gone, and the market structure looks healthy. Even miners, typically the first to show weakness, are increasing their holdings instead of liquidating. Technically, the key levels to watch remain 115 and 120,000. Hold above that first level, break through the second, and the next stop could be 130,000. Lose support, and a retest near 110 is possible. But this rally feels different. It isn't driven by memes, ETFs, or hype. It's driven by a quiet return of confidence after cleansing the system. Crypto has a short memory, but it also has a resilient one. This is that resilience in motion. While Bitcoin reclaimed the headlines, Binance quietly set off its own fireworks. Over the weekend, the exchange announced one of its largest quarterly token burns ever, destroying $1.69 billion worth of BNB. The burn is part of Binance's deflationary model, designed to reduce supply and increase long-term value for holders. The result was immediate. BNB jumped more than 3% on the day, leapfrogging XRP in market cap and retaking the number 4 position in the global crypto rankings. As CoinDesk reported, the burn served as a reminder that Binance remains highly profitable despite a year of regulatory headwinds. It was also symbolic, a clear statement that Binance continues to dominate as the ecosystem's most active utility token. BNB burns aren't new, of course. They happen quarterly, tied to trading volumes and platform revenues. But this timing matters. It arrives just as confidence is returning to the market and gives traders a concrete sign of strength. Some analysts view it as a turning point for Binance Coin's valuation, while skeptics warn that centralized token models carry long-term risk. Yet right now, the market doesn't seem to care about caveats. Scarcity is winning the narrative. For altcoin traders, this is a reminder that protocol events still move markets. Burns, upgrades, and airdrops. They're the catalysts that create demand surges in a post-ETF world where hype alone no longer cuts it. For BNB, this was the perfect combination of timing, scarcity, and symbolism. After weeks of whiplash, the broader crypto market is finally breathing again. Nearly 90 of the top 100 coins are trading in the green, and total market capitalization has climbed to just shy of $4 trillion, a level not seen since midsummer. This kind of synchronized strength is rare. Usually Bitcoin rallies first and leaves the altcoins trailing behind. But today, the market is moving in unison. Ethereum up 6%, Solana and Avalanche up 4%, and several smaller caps posting double-digit gains. Part of this is macro, reflecting the same risk-on tone that's lifting equities. But part of it is structural. ETF inflows into Bitcoin and Ethereum remain strong week after week. Institutional demand for tokenized treasury funds is rising, quietly channeling liquidity into digital assets. And when liquidity returns, everything else follows. Ethereum's gas fees have normalized. DeFi volumes are up 30% week on week, and stablecoin supply is expanding, always a leading indicator of market health. In simple terms, when stablecoin printing goes up, it means money is coming in. Investors are starting to treat crypto less as a speculative corner of finance and more as a mainstream capital flow. You can see it in the data, the tone of media coverage, and even in the language of regulators who are shifting from denial to design. While traders obsess over price charts, the real revolution is happening behind the scenes. The tokenization of traditional assets is no longer a theory. It's becoming policy. BlackRock's tokenized treasury fund has surpassed $700 million in assets. Franklin Templeton's on-chain money fund has crossed $400 million. Together, that's over $1 billion of real US debt securities already trading on public blockchains. JPMorgan's Onyx network is processing tokenized settlements for corporate clients in Singapore and London. And Goldman Sachs has just confirmed its digital assets division will expand into on-chain repo markets. Wall Street isn't fighting crypto anymore. It's rebuilding finance on top of it. For retail investors, that shift is monumental. It means liquidity will move faster, settlements will become cheaper, and barriers between markets will begin to disappear. But it also raises profound questions about control. If your stock is a token, your bond is a smart contract, and your money is a digital ledger entry, the line between finance and code blurs completely. That's the world we're entering. Programmable, instant, and increasingly centralized. Some call it progress, others call it control. And that's why Bitcoin and Ethereum remain essential. They're the open, neutral rails that keep this transformation from becoming total surveillance finance. It's a quiet race now between the old system going digital and the new system being born. So, as Bitcoin steadies above 115,000 and Wall Street quietly rewires itself on-chain, the message is clear. Belief is back. Crypto isn't just surviving, it's maturing. The shakeouts are shorter, the recoveries are faster, and the vision is getting sharper. Every cycle trims the noise and strengthens the core. We'll keep tracking it every step of the way, from the institutional front lines to the smallest on-chain metrics, because this is where the next generation of wealth is being built. Stay sharp, stay early, and as always, protect your assets with a secure hardware wallet. You can grab one using the link in the description, because the comeback has already begun. And as always, we will see you at the top.